Investors are seeing red, and lots of it. Worries about the global economy have rippled through financial markets, driving share prices down from New York to Tokyo to Sydney. The signing of the US debt deal failed to soothe investors, spooked by slowing US growth and the Eurozone's debt woes. In Australia, nearly $50 billion has been wiped off the market in just 2 days. And analysts say the economic outlook is looking so bleak that an interest rate cut could now be on the cards. Here's finance reporter Sue Lannon.
It was a day of reckoning for Wall Street. The debt deal may have passed in Washington, but now investors are worried about the US economy on the back of more disappointing economic data. Further fears too about Europe's debts, this time in Italy, where officials held an emergency meeting that sparked a rout on global markets. In the US, the Dow Jones index lost just over 2%, wiping out most of this year's gains. In London, the FT100 dropped 1%. In Japan, the Nikkei was also hit. And back home, the All Ordinaries index also dropped 2% or 102 points. The ASX 200 fell to its lowest level in almost a year. The benchmark index, the ASX 200, appears on the verge of a bear market. It's already down around 9% this year as economic gloom and debt crises dampen investor confidence. That's a market where prices are falling and investors are selling.
So yes, we're heading towards bear market territory, and if the macro news globally continues to disappoint, then it's a bear market that I think will continue right into next year.
And an even bleaker outlook.
The risk of recession next year is around 30%.
Others are not so pessimistic about the likelihood of a bear market here or globally.
Well, at Barclays, we don't actually believe so. We believe the US economy in Europe will muddle through and Asia will remain strong.
The Treasurer is talking down the US and Europe, but talking up Australia.
We do have some soft spots in the economy, but we shouldn't lose sight of the fact that unemployment is low, that public debt is low, and that we have a huge investment pipeline.
And some say a rise in official interest rates could be needed.
If the economy, if the recovery remains on track and we see very, very strong investment intentions in the mining sector, taking investment to near 50-year highs for the private sector, that I think there will be likely a need to raise interest rates a little bit to contain the inflation pressures.
Others predict a rate cut is more likely. Short-term money markets have factored in a rate cut in coming months. Sue Lannon, ABC News.